yesterday. We need to talk about it. We should talk about a pause or perhaps a cut. We now have a 5% risk-free rate of return. What does that mean? What happens from here? And I don't know if you heard, but Patrick Bet-David threw down a 9-figure offer to Tucker Carlson to join the team at Valuetainment. Talk about taking your shot. I think that is amazing. Again, you miss every shot you don't take. So respect Patrick Bet-David for taking his shot. I think it was a genius move and a strong offer. So we will see where that goes, but I just want to respect the game and give Patrick Bet-David huge kudos for making that wonderful move. So let's get into my Fed reaction. It's probably going to be very different than most of the pundits out there. You've probably come to expect it. So first, let's get it off the table. We got the 25 basis point move that you and I, have expected for months. Second, I think this is the last rate hike, which you and I have expected for months. So we got that out of the way. One, I was disappointed. You heard me yesterday here talk about Jerome Powell needing to be a hawk or a pterodactyl. You perhaps heard Anna Kelly and I debate what was coming on a scale of 1 to 10. I wanted an 8 or a 9, and I think we got a 6. My greatest disappointment with the release, and more importantly the Q&A, is, again, I think Powell had his voice, and he simply could have talked higher for longer, data dependent, but yet he clearly put pause on the table. I believe that was a mistake. And again, this is sort of nuanced but important. I believe a pause in June was coming no matter what. I think the economic data is going to get bad. But what did Powell do simply by talking about a pause? Look at the 10-year. The Fed raises rates and the 10-year falls. So, one of the people I follow on Twitter is a huge housing bear, to which I replied or put out a tweet saying, "Hey, Powell, you caved. Are you trying to be Arthur Burns?" She replies with something like, "He had no choice. Have you seen the regional banks?" To which I replied, "You don't get it." What Powell did by putting pause on the table means 10-year rate is going to fall. Mortgage rates are going to fall. More importantly, not only mortgage rates are going to fall, but the margin that I have been educating you and sharing you on all year is about to collapse. Not collapse, be reduced. It will go from 3 standard deviations to 2 standard deviations. We will see mortgage rates under 6 before you know it. And to which this housing bear didn't understand is we now have evidence that if mortgage rates go sub 6%, demand goes bonkers and supply doesn't. So what happens to housing? Housing bears don't understand how this works. All they want to do is bitch and complain, and they're not in the know. That's exactly what's going to happen. The Fed hints pause. That was the mistake. 10-year falls, mortgage rates fall, now also the margin falls. And of course, demand picks up, supply doesn't, and we have this huge kerfuffle going on. So I was disappointed. This morning, there are already quote-unquote bets or predictions on the June Fed meeting. And this is exactly what I feared. This is what I feared. The moment Powell put pause on the table, June expectations are 98% pause, 2% cut. I'll say that again. 98% pause, 2% cut. There are no predictions for a rate increase. That is the mistake. If Powell came out like a pterodactyl, we would have seen something like, 55% pause, 10% cut, 35% raise, something like that. The market would have still have seen that a raise is possible, and he took that off the table, so not good. He did talk about basically inflation is going to come down slower than people are expecting. No rate cuts this year, to which the market said, no, 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 no. We expect 3 rate cuts this year. This is getting very interesting. And then lastly, we are clearly seeing tighter lending, which acts as a quarter or perhaps a half. I think we're going to see that in the next week or so with the Mortgage Bankers Association survey, which will really tell us about lending. Near as I can tell, lending is down 75% in the commercial space. Residential, not impacted. Crash Bros, you don't get it. Fannie and Freddie are under government stewardship. They will be buying all the first-time homebuyer homes and owner-occ loans. Residential won't be impacted. It's all commercial. So, the 10-year. The 10-year on Tuesday was, I got it here, I wrote it down, 1 sec, 3.61, I think. Yeah, 3.61. This morning, I checked, it was 3.36. That is what happens when you talk pause. That's down a quarter in like 2 days. There will be big mortgage rate drops today, in my opinion. There'll probably be 2 mortgage rate drops. What does that mean? Remember, we hear from all the mortgage lenders that they get these repricings. There will probably be a couple today. We do get a big jobs number tomorrow. If that comes in hot, like the ADP report, it will be interesting to see what the market reaction is. But yes, lots going on. I was very disappointed. This was my disappointment. All Powell needed to do was talk tough, use his voice, and we wouldn't get this 98% pause, 2% cut. He missed the opportunity. He wimped out. And again, this is a guy who is telling you we're pausing next month. So, I don't know. Frustration, I guess. We now have a 5% risk-free rate of return. What does that mean? We are going to see more and more and more capital leave the banking system and go to money market accounts and treasuries. This is going to happen. And again, as we have shared for months now, very similar to the S&L or savings and loan crisis. You could back then get double-digit rates of return and you were capped on your savings account. So what did people do? They left the banking system and they went to money market accounts. So again, very predictable. We brought it to you here early. More and more of you, like myself, have taken money out of banks and put it into money markets and treasuries and CDs. It's the right thing to do. 5%. Shoot, 2 years ago, even 18 months ago, there were multifamily investors going for 3.5. Imagine doing a capital raise with a cap rate of 3.5 when I can get 5% on a treasury. Not happening. Not happening. Unemployment claims. We got to talk about this every Thursday. Every Thursday we get our weekly little drip of what is going on in the economy with weekly unemployment claims. They came in today slightly higher. I think this is the second week in a row. It might be the third. I think it's the second where the actual numbers are slightly above after what seemed like 9 to 10 weeks of being consistently under. They came in at 242,000. Expectations were 240, and last month was 230. Or I'm sorry, last week, be clear, was 230. So 230 last week, 242 this week. What's that? Roughly 5%. So again, maybe what Powell is doing is working. Lance Lambert, again, a great follow on Twitter. I believe it is @NewsLambert. He is a Fortune editor. We will be interviewing him today. We are so lucky with that. His article that just came out yesterday, I believe, you can still get it on Twitter. I believe it is still in front of the paywall. After 24 hours, it goes behind the paywall, so follow him. Or you can follow me because I retweet lots of his stuff. Here we go. 93 of the 100 largest markets, prices went up in March, which means 7 went down. Crash Bros. I don't know what to tell you. 93 went up, 7 went down. This is really a supply and demand game, which again, we have brought you on this channel and told you about. Supply is greatly reduced. People are locked in. You're getting some buyers making that choice. Sacramento Appraiser on Twitter put out a great tweet today. He talked to an owner who has a sub 3% mortgage. They are selling that home and buying a home, a slightly bigger home on land, and their new interest rate is in the 6s. So sub 3 in the 6s. Why are they doing that? Lifestyle. They want the acreage, they want the land. Their payment is going up $1,100. $1,100. So there is a price where what lifestyle you will take. So in this case, apparently $1,100 a month forever, 360 months or 30 years, the land is worth that. So there are some of that, but there's not a lot of that. And that's why supply will be greatly reduced for years to come. For years to come. Some earnings came out here. Shopify beat top line, beat bottom line, but 20% layoff. That's a haircut, right? We have talked on this channel about these tech companies doing 5%, 8%, 20%. That's a cut. Think about that. 1/5 of your workforce gone. That's a deep cut. That is what most companies should be doing, right? As someone who has been through a couple of down cycles, most companies don't cut enough and fast enough. Shopify might be a little late, but they went for it with a 20% cut. Then Paramount Global. Paramount Global came out and cut dividends. They cut their dividend, which I'm sure is going to hurt the stock going forward as people were using it as a dividend play. And then last thing I didn't write on here, Ferrari. Yes, folks, the world is not fair. The ultra wealthy, the folks that line up to get Ferraris, they still got money. We've seen all this money printed and it all got sucked up by the uber elites and they are buying Ferraris. Ferrari backlog is now into 2025. That is pretty amazing. So if you want a new Ferrari, you were going to have to wait quite a while. So lastly, folks, let's congratulate some people. Yes, we are doing the work. We are finding great deals. I want to congratulate Corey for getting a great deal and Jason for getting a great deal. Corey, Jason, congratulations, folks. Have an amazing day. It is Thursday, May 4th. People tell me it is Star Wars Day, so if you like that, go watch a Star Wars movie. Take care. Have fun. Bye-bye.